If gold is so valuable, why are gold miners poor? Today, our gold is going to be a square, and our gold miner is going to be a triangle. Let's begin. In the next few minutes, I'm going to show you why gold is insane money, yet Mr. Triangle is still dirt poor. Does gold hold value? Why does it hold value? And does gold's value only benefit everybody else except Mr. Triangle? Gold, the shiny stuff that people say it's worth thousands of dollars, if not millions. This is a 1933 double eagle, estimated to cost $19 million. But it's just a metal, AU on the periodic table. Rare, durable, doesn't rust, doesn't corrode. Perfect for storing value. Humans have obsessed over it for thousands of years. Jewelry, coins, crowns, symbols of power. Key properties, rarity, you can't just dig it up anywhere. Durability, doesn't rot, rust, or fade. Eternal shine. Malleability, bend it, shape it, stamp it. Coins, bars, necklaces. Recognizable, shiny, yellow, unmistakable. Everyone knows it's valuable. Gold is valuable because we all agree it's valuable. Economists call it a store of value. Paper money? Print too much and it's worthless. Gold? It sticks around, keeps its purchasing power over decades, centuries, even millennia. 3 big reasons. 1. Historical trust. Humans have trusted gold for thousands of years. 2. Wealth protection. Inflation spikes, financial crisis, gold usually holds or even grows in value. 3. Industrial and decorative demand. Jewelry, electronics, dentistry, high-tech industries. Gold is everywhere. Mr. Triangle wakes up before sunrise, with mud, rocks aching back, just to dig. Hours later, maybe a coffee cup of dust, maybe 1 gram of gold, $60 at global price, but that's not their paycheck. Not even close. I'm mining gold in the form of subscribers. Please click on that subscribe button so I can afford some gold. 1. Low productivity. Artisanal miners often slog through muddy pits or riverbeds for grams of gold after a full day's work. One Reuters report from Mali shows a small-scale trader buying a miner's entire haul, about 7 grams for only $30, a few dollars of income for a day's labor. In many mining regions, normal wages are already only $1 to $2 per day, so even a handful of grams can barely edge above subsistence. Most days, however, yield nothing at all. 2. High costs. Everything costs money, even before the first nugget is found. Artisanal miners pay out of pocket for food, simple tools and equipment, pans, pumps, generators, fuel to run motors or trucks, and toxic chemicals like mercury or cyanide to extract gold. For example, in Zimbabwe, a prospecting license alone costs about $100, and pegging a claim another $200 to $300. Worse, multiple government agencies each demand fees or bribes to look the other way. A cat and mouse of extortion noted by researchers. 3. Exploitation by middlemen and weak markets. With little savings or credit, miners are desperate for immediate cash and must sell on the spot. This empowers middlemen, dealers, and smugglers to dictate terms. Example, a Reuters photo story in Mali shows a trader buying 7 grams of gold, the miner's full day's work, for just $30. That works out to only about $4 to $5 per gram, far below international rates, illustrating how middlemen capture the difference. 4. Small scale and lack of legal power. Mining is very unequal. Large-scale mining companies hold legal concessions, deep pits, and export infrastructure, while artisanal miners toil on the fringes with shovels. Small miners lack permits, insurance, or enforcement of their rights. Example, in the Prestare region of Ghana, Reuters observed rudimentary wildcat pits where men in shorts wade in mercury-laced water for bits of ore. They have almost no gear or legal protection, yet their output is pooled into the global supply chains of big firms. 5. Corruption and poor governance. Gold mining yields big government revenues on paper. Royalties and taxes are supposed to fund roads, schools, and clinics. In practice, corruption diverts those funds, leaving local miners and towns with none of the benefits. Many governments quibble with big companies over taxes, but pay little attention to informal miners or invest in their welfare. Example, in Ghana, analysts warn that illegal mining profits often enrich corrupt politicians or gangs. Formal crackdowns on Galamsey have seized some equipment, but community groups note little real enforcement, a reflection of officials' own stakes in the trade. 6. Price volatility and currency risk. Gold is priced in US dollars, but miners earn and spend in local money. When currencies tumble, a higher gold price can still leave them poorer. For instance, Zimbabwe's return to a local dollar saw a 43% crash in 2018. Although the global gold price was rising, local prices did not keep up because of forex controls. Global crises amplify this effect. During the 2020 COVID lockdown, Reuters found small-scale miners across Africa and South America forced to sell at 30 to 40% discounts locally. In one case, gold was trading around $56 per gram worldwide, but only $36 to $39 per gram in Zimbabwe's market. Does gold's value benefit miners? Most of the time, nope. Mining gold is brutal, dangerous, expensive, sweat, chemicals, back-breaking labor. The pay? Barely a fraction of the gold's real value. The big money goes to corporations, investors, and governments. The miners, they risk it all and see almost none of the shine. Why does the system persist? Middlemen profit from low prices. Companies profit from scale. Officials profit from hidden deals. The miners, losing every single day. Are there glimmers of hope? But it can change. Cooperatives, fair trade certifications, transparent buyers, local refining, training. Miners keep more profit, doubling incomes in some cases. Gold is valuable, the price is huge, but value isn't destiny. If the system is rigged, gold just makes the people at the top shinier and keeps the diggers poor.